LFG, thanks God it's Monday. Finally, it's Monday. Another week starts with fantastic MicroStrategy content. Why? Well, here I have three of the sharpest, my opinion, the sharpest financial minds when it comes to looking at MicroStrategy. There's a whole chat there blowing up, just noticed. And it's my joy and honor to have these guys here. We got Punter, Jeff, Ben Werkman, Ryan, Raekwon. I'm gonna not push too much more right here now. I wanna hear from you guys. Last Wednesday was nuts. I think all four of us we're among the 4,000 people watching MicroStrategy's earnings call. I think all four of us really enjoyed that and were blown away. And I want to hear you guys. You now had a little time to digest it, think about it. We had a weekend. You guys had a great talk also on MicroStrategy True North. Why don't we start with you, Ben? What's your take on earnings call?
I loved it.
Yeah.
Yeah, I loved it. I mean, I haven't seen Saylor have that much fun on an earnings call or maybe in an interview ever. Like it feels like he's kind of hitting his stride here all of a sudden where he feels really secure in the strategy he's laid out and he's getting ready to push that right out in front of everyone. And I love that he was even, he probably wouldn't phrase it this way, but being a little bit cocky and telling all these other organizations, it's time to get your head in the game because I'm going to drag this train away from the station if you guys don't enter soon. Right? You can't signal to the market that you're buying $42 billion worth of Bitcoin and allow people to sit on the sideline to evaluate for that much longer, right? I mean, he's calling them out. He's telling them all the ones that are 1 foot in, 1 foot out. If you're planning to press this strategy, you better start accumulating quick because if you don't, he's going to put that structural bid under Bitcoin himself. And if you think it's staying at these prices, you're out of your mind.
Amen to that. Absolutely. And by the way, American cap here, there's election day tomorrow, vote freedom, whatever that means for you. But Ben, has anything changed for you in looking at MicroStrategy after watching the earnings call? Like we had this conversation the last couple of weeks. We're all very excited and bullish on MicroStrategy. Anything in particular that may have changed in your viewpoint?
So in my viewpoint, it only got better, right? I mean, you hear that and you see people going and saying, we're going to issue $21 billion in equity. And then the next day, the stock doesn't just crater, right? That's unusual in the equity markets. Most people see that big of an ATM and they go, massive dilution, share price isn't going to perform, got to get out. And that wasn't the case. It stayed totally flat, even on down days. And I think people are looking at this, and I think we're starting to get our first signals that people are starting to understand the strategy. They're understanding that these offerings aren't dilutive, right? They're value accretive. Because every time he issues $1 using that equity raise, he's buying Bitcoin, he's shifting it over to the balance sheet. It lives there supporting your shares forever, right? So I think that's a really powerful message for people to pick up on. And we're still grappling with how are we going to value this thing? And it was great that it got to the point where he borderline had to tell people how to value this company because they're having such a hard time getting out of the earnings per share mindset, revenue growth, right? Getting out of all the traditional ways he would look at a company and put a forward-looking valuation on it, where he actually had to take time in an earnings call to say, hey, dummies, here's how you value our company, right? It's a different metric. And I think that was just so fun to watch him kind of go down that path and push it so blatantly out in front of everyone that, no, it really hasn't changed anything for me, except I personally still have to wrap my head around these numbers and what they mean to be buying $20 million of Bitcoin every open market day in 2025, and then only growing that 40% in 2027, 28% in 26, and then 27. I mean, it's just such a huge and ambitious plan that it's going to take all of us, even though we try to get answers fast, it's going to take us all a while to wrap our heads around exactly what that means and what we think the impact is going to look like.
Definitely, but so much clarity. He delivered, or all of them on the call did. A lot of it has developed, I guess, for all of us looking at MicroStrategy from the sidelines, and what he laid out there just shows how crisp clear they are now in their strategy, what they're going to do, how they're going to do it, all the different multipliers of different ways of investing in Bitcoin and MicroStrategy, and convertible bonds that's outperforming Bitcoin themselves. Nuts. Jeff, really looking forward as well to hear your thoughts, and your takeaways and anything that may have changed since Wednesday. Please go ahead.
Yeah. I mean, I think everybody spent this weekend absorbing what that entire call was all about. I know it was omnipresent in my brain. Like I was thinking about it literally the entire weekend, and I also had some crazy calls on Friday and over the weekend, kind of walking through this. So, hit on Ben's point. I mean, the transparency is incredibly helpful for the market, right? You have $42 billion buy on the horizon. You just gave air cover to the entire market to buy Bitcoin. And if you wanted to exit, you have exit liquidity, right? You have $42 billion of exit liquidity coming over the next 3 years. So that is air cover for anybody to take a risk if they needed to take a risk, right? Which that level of transparency, and we're going to be doing this on the horizon, is what the market needs. The $21 billion of convertible debt was another really interesting concept. And I had some funny conversations on Friday and over the weekend, thinking about convertible debt as collateral. So this might be over some people's heads, but in the insurance market, insurance companies can't put Bitcoin on their balance sheet because they don't get credit for holding it. So you can't lend against it. Okay. But guess what you can put on your balance sheet and get credit for? Convertible debt. So this is big, right? Like the entire insurance market probably holds maybe $3 trillion of debt, maybe more. And so I want to go sell these things to the entire market. Like how do I get on board? I want to go sell all of this convertible debt to the insurance market. I think I could probably sell $500 million, $1 billion of it in a year. The part that's incredibly impressive is that it's satisfying an investor's demand for that exposure. And it's providing a product that's correlated, minimized upside, minimized downside, and it can be used as collateral within traditional infrastructure, like traditional framework. Much of retail investors, much of finance don't really understand that concept and the regulatory hurdles that are in place for Bitcoin, and where this convertible debt as an alternative can provide a lot of financial power for other financial institutions. So I'm incredibly bullish on that, right? Like the bond market is $300 trillion big. $21 billion of convertible debt is 0.0007% of the entire bond market. So if people think this is an insane number, it's nothing. It's a pittance in the total bond world, and they're going to be able to. I think they're going to be able to blow out that $21 billion. I think pretty easily over the next 3 years. So will be interesting to see how it's accepted by the financial markets. But I mean, I'm incredibly bullish about it. Like even no matter who wins the election, right? Like the foot on the gas pedal regardless. And it's been an interesting thought experiment. I've had some fun conversations. People want to buy this. The people want to buy this debt, and I'm excited to sell it if I can. So that's kind of.
Are you taking this conversation into your work life and your colleagues?
Yes.
And that's wow, that's amazing.
Yes. And yes, I had a conversation today. I was talking about the insurance market, and I said, the entire insurance industry largely misses debasement risk. The entire industry is capturing inflationary risk, but they're missing debasement risk, and they're blind to it. Like the entire market's blind to it. And so if you think about how insurance works, right? Like you take in premiums in day one to pay out liabilities in the future. But if your expectations for inflation and debasement are just get blown out of the water and they're completely unknown, the long tail insurance market is eviscerated. And so I'm in this sound the alarm bell kind of moment where it's, if you don't take into consideration debasement risk, there's a potential that like this entire part of the market is evaporated. Like nobody feels comfortable charging enough premium for the risk that they have on the horizon. So that's the conversations that I'm having in bringing Bitcoin and I guess this convertible debt to the forefront. So yeah, it's crazy. I've been not on Twitter much because there's a lot of conversations being had and a lot of things to figure out. So yeah, it's exciting stuff.
Well, that really is exciting, Jeff, that you're seeing demand for this in your industry.
Yes.
It's a big industry. It's a lot of money. It's institutional level money. It's that's truly exciting. Before we jump on to Ryan, we're interrupting with a little message from the audience from DT here. Ryan, I don't know what it means, but I guess drink more water. It's always good. It's always good with water.
He's got like 64 ounces there. He's got like a gallon. Keeps the
It
brain
looks like
sharp.
he's cutting for a wrestling tournament.
Yeah.
Ryan,
I love water, and to me that thing's like a shot glass. Like I'll throw it back. But that's also the cool thing about these sessions, right? Like this is what I actually wear: sweatpants and a hoodie and a hat on backwards, and I
and
drink
sunglasses.
Like, you know what I mean? Me and Jeff would almost like, at least me, would stress out too much about this stuff, about like trying to have every like little detail perfect, like early quant bros type stuff, especially me stressing out. But the coolness about this is like you can just relax. It's like more of like a working session. Like we're all like writing stuff down on the side, you know what I mean? And here's the reality. These two guys are the brains of the operation out of the three of us. I have nothing significant to. I will throw one thing. I'm just like the hype guy. I'm gonna like work with Lambo. I'm gonna make memes, and I'm the guy that Jim Cramer has to like deal with. You know what I mean? Like that, the funny, almost like the funniness of it. But yeah, like I said, not much to add here. The thing I want to say at the top though is there an echo on the call?
A little bit.
You know what? I might just throw on this this headset. That could probably change it. Try now.
Sorry, it was just like throwing me off as I was thinking. Yeah, it's not there anymore. But
Fireworks for you, Ryan.
The reason I've been kind of almost like sleight of cheek or being cheeky and saying that like it's over is because I think for me it's finally clicked that like MicroStrategy is the team of financial engineers, and they're really the only game in town in size. Of course, I mean, I love Semler, we love Metaplanet, you know what I mean? But that's like a smaller scale operation. MicroStrategy are the financial engineers bridging the gap of Bitcoin to, the equity markets, the options market, the debt-based markets. You know what I mean? If I could just stop and do a quick poll, is anyone talking about IBIT? Yeah, we do the updates once a day, the inflows, whatever. Nobody cares. Like that's the reality. It's the high sex appeal, for lack of a better phrase. It's the high sex appeal. Saylor calling it the hottest stock in the universe. He's not wrong. You know what I mean? And that's where people can move in on the debt piece, the equity piece, and the options market piece. And there is something for everybody here, baby. You know what I mean? If you're a hedge fund, if you're a bond only guy, if you're like me and you're like a mercenary in the options market, there's something here for everyone. So that's like really the compelling. That's when I was like, it's over. They are the financial team that's going to do this. They'll spend an unlimited amount of capital, like how Saylor said, in April of this year, I think right before the halving, because he was talking about the halving, but he was saying, imagine there is like an investor with an unlimited pool of capital buying all of the Bitcoin. And I know he was talking about the halving. I get it. But to me, like, that's micro strategy. It's all gone. The price in the short term does not matter. Like, all of the Bitcoin that will ever exist already has a future buyer. So let me pause there.
No, it's absolutely. And is my mic coming through? You guys can hear me? Okay, super. And it was that as you were introducing with Ben, talking about, people better get on that train because it's going to leave the station. I mean, $42 billion of pretty much guaranteed incoming buy wall. The whistle is blowing on that train. Choo choo. I mean, the train is leaving the station right now. Sailor's going to buy for 42 billion. And honestly, I'm very bullish. I think that could be all. I think they're going to run out of those next year. I think that's all done by end of 25 with the bull run and everything. But I'm probably uber bullish and a bit unrealistic on that.
Well, the convertible. So I started looking at the size of the convertible market because it's kind of tough to wrap your hands around how big that is. And British Hodel asked me that question. I didn't actually know the answer to it, so I started looking, and it looks like they're estimating in 2025 that convertible bond market will be about 700 billion. And the U.S. makes up about 2/3 of it. So you could assume 467-ish million is going to be dedicated. Billion with a B.
Yeah.
Yep.
Yeah.
Oh, did I say something? Yeah, billion.
You said million. Yeah, billion. Yeah.
Oh, yeah. 467 billion is dedicated to the U.S. market. What they're
Can't get anything by Jeff. I'm sorry. You can't. You can't. Not
Someone's got to
detail.
draw us back, right? Because otherwise, someone in the chat will pick it up, and the game's
He's
over.
a quant.
Right? You can never trust us again. It's over.
That's right.
But they're estimating 100 billion in new issuance in 2025. So if MicroStrategy is only doing 5, that's only 5% of that. So there's a ton of demand out there, right? And then you look at a lot of these convertible arbitrage desks that are, part of hedge funds or whatever, they're all competing on the street to go bring in capital by providing the best returns out to their investors. Well, if you're one of the ones that gets in on the $5 billion of these MicroStrategy convertible bonds where you've got more volatility to trade against than your competitors do, your fund is going to look better, right? So that game theory starts to kick off where it's everyone wants to hold the best asset for the class that you're incentivized by. And these guys are incentivized by convertible bonds that move, not 20 vol, not 30 vol, right? They want the 100 vol underlying equity so that they can hedge against that and make their returns. So I think we're just kicking off the game theory. And I think you're right. I think he's going to have no problem. I think he could get rid of them in January if he wanted to, because I think there's probably that much demand. You got to imagine that his phone's ringing off the hook for the guys that have to buy these types of bonds. I mean, that's the part people need to appreciate is they have to buy these kinds of bonds. There's no other option. And so they're coming and they want them, right? And he's putting that product out and they're taking as much and more than they can get their hands on. It's great.
Yeah. One point I want to add on that is these convertible ARB desks that are holding on to these. And Ben, we talked about this over the weekend, is the convertible bond desks that are holding these and hedging. So they're shorting the stock when the price of the stock goes up because they're holding technical spot shares by holding the paper. So they're basically hedging the position. And when the price of the stock goes up even higher, and they're fully hedged, and once they're over this kind of convertible period, they are issued the shares, and then they close out their shorts. So I think, Ben, you've pointed this out multiple times. A large proportion of the short interest on MicroStrategy is likely just already 100% fully hedged, part of the convertible debt are ARB desks that are working with both components.
Yeah, they'll be at various points, right? It depends on where the stock price is in relation to their conversion price, right? So as it climbs higher and higher above that conversion price and the delta changes on those bonds, they'll take bigger and bigger short positions. But the reason they do it is because they're really making a trade against the movement in the equity versus the movement of the bond pricing. And the bond pricing moves less than the equity because it's got that synthetic put option associated with it. So if they go on a rip and these convertible ARB desks increase their short, they're expecting that to go down, 1.5 times faster than the bond value or something to that nature. So they're capturing that difference by taking the short position in the equity, hoping it draws back down. The bond won't go down in value as quickly. And then once they think it bottoms, they'll start covering out that short, and then they'll just wait for it to do it again. And they want to do this over and over again. And that's how they're generating these constant returns throughout the cycle. So what you're going to see, and people have been asking, what's going to be the incentive for these guys to convert? Well, the 2027s, they're going to convert because MicroStrategy can call those to redeem in cash if they hit this 130% trigger, because those qualify for that. So they'd be dumb not to convert into the equity and take the gain that they've got there. So 2027s aside, the 2028s and the 2030s that are also in that countdown right now, they would really look at potentially converting if they got to a point where they were fully hedged, right? So if price had run far beyond their conversion price and probably even above the 130% price, now they might be close to 100% hedged out on the equity position. And if now all of a sudden we get this repricing higher, and they're looking at the likeliness of that stock to come down below where they took their big short position, now they're kind of trapped, right? And they don't want to carry that short position because most likely they're doing it with, margin accounts and stuff that carry cost to it. So they don't want to be stuck carrying this 100% hedge that they can't get out of. So if they feel like they've lost the ability to trade the delta now, they'll get out, hope they can get in the next round, get the next round of converts, reset their delta. They'll be back to trading volatility day to day again. So that's what kind of incentivizes those guys as the price moves to let these things go early.
Incentivized to let it go. Yeah. Incentivized to let it go early. And these are 8-year covenant, or like 6 to 8 year covenants. They got 8 years to do this, right?
Correct. Yeah. So it's kind of a point in time when this happens, because as we've seen, a lot of the MicroStrategy movement can happen in the matter of a month, right? And all of a sudden it can be up 100%. And, so for instance, right now you've got the 3 that are in the countdown, say, regardless of whatever your politics are, say Trump wins and he's actually starts looking like he's following through on the strategic reserve and all that kind of stuff, you could get a repricing higher very quick. And all of those convertible ARB guys could find themselves fully hedged because they want to lock in that profit, right? They don't have to go for the home run. That's not their game. This would be considered a home run because they're getting all the return in a condensed period of time. But now they don't want to tie that capital up on the off chance the stock doesn't come back down, right? So now they want to free that capital up and redeploy it again so that they can get back to generating returns. So it's a nuanced game that they're playing, but it's all about the movement up and down for them.
Can I ask Ben a question since we're on this? And this might just be like a pure ignorance type thing, but the people who want to buy the convertible bonds, why don't they just buy the convertible bonds and not do all this delta hedging with the bond price? And I feel like they end up just getting like chip chopped up. If someone wants to own the stock, own the stock. If someone wants to own the convertible bonds, own the convertible bonds. Why are we constantly delta hedging the bonds?
Well, say that at the end of the maturity, the stock comes back down and now you can only redeem it for the principal amount. What have you done over that entire period of holding that bond, right? You can't be 100% sure that the equity just runs away in price and you get to realize that call option in your bond. So if you were just to sit on it and you just bought the bond and let it run its course to maturity, if you get to maturity, there's a point where you might just get your principal and you'll just have collected the coupon payments. And how happy are your investors going to be that you collected a 0.625 coupon throughout the term of locking up $500 million, right? Not very. It's not a great return. So they have to take the chance of making these small returns throughout the life cycle of these bonds to make it worthwhile for these big desks to hold them. Now, Jeff's made the point before that you might get a different kind of buyer that buys these bonds, people like corporations that want the exposure to Bitcoin, and maybe they want the, I'll call it unhedged from a convertible perspective, but they just want to own the bonds and have the call option associated with it, but know that their downside's protected. That's a different type of convertible bondholder. It's not the ones that we've been seeing popping up in the 13Fs. Those have been mostly these convertible ARB desks. But there are different types of buyers that want the upside exposure to Bitcoin with a floor, that synthetic put in place for them so they can dip their toe in the water that way.
So on that point, couldn't a corporation buy the debt, pay a convertible arb desk a fee to manage the debt, to hedge the downside? Isn't that possible? I'm assuming that's probably how some of these exist, right? Is that the convertible arb desks are managing it, getting paid a fee, and they're sourcing the capital from outside positions. I would assume that's probably how that works.
It's like
Maybe.
when a hedge fund middleman to like run that risk Yeah, that has to exist.
Right.
But I wonder if they would take that, right? It probably depends, one, on which type of bonds you get into, right? So if you were one of the ones that bought the bonds for 2032 or whatever it is that have the 2.2% interest rate, you might consider that like a bank account that just pays you 2.2% interest on your cash, but you've got the upside of the call option to it, right? So they might not bother paying somebody a fee to try to capture these small movements and risk, getting caught locked out of the equity upside, right? If they take a short position in it. So they might not bother if they get in that scenario. Maybe if they're the people that get like the zero coupon, if they start doing more of those, then maybe you see some of that. Maybe they want to generate a little bit of return, but they want to always stay net long, right? You could see that happen, but to my knowledge, we haven't seen it yet, but I'm thinking that we'll probably see some different models here for how these are deployed here shortly.
Yeah, that makes sense. I mean, yeah, I could see corporations wanting to pay a fee to have somebody manage this while still carrying the exposure, particularly because the historical bonds have outperformed the price of Bitcoin, and they've been the best bonds in the entire market, right? So sure, take 10% of the profit gain, minimize my downside, hedge throughout the process. It's an interesting concept. I mean, the financial design is really unique, and it'll be really interesting to see how competitive these things get, right? Like, if the market starts driving price down because there are so many buyers that are vowing for $5 billion, there's $40 billion trying to get $5 billion of convertible debt. All of a sudden, you may be looking at a scenario where all of it's zero coupon bond or negative interest. I keep throwing out the idea of negative interest. I think it's a really interesting concept because it could work. I don't know about the accounting component, but a situation where MicroStrategy gets paid basis point fees to generate and hold these bond issuances.
Yeah, and with corporations or some other party that doesn't necessarily want to hold these forever, you might actually see the liquidity pick up in the actual bond market trading the paper itself, right?
Yeah.
If they don't want to go in and do all the delta hedging, you could see these big runs and they might just offload the paper,
just sell
hoping that they can get them back later, or just take the gain, right? And call it a day, and maybe they reload later. You could see that model too. I don't think we know what that end state's going to look like yet.
The secondary market for convertible debt. I wonder where is that traded? How do I get a glimpse into that market? That's probably crazy. I probably need a Bloomberg terminal. Ryan's got it.
Dylan Leclerc, I just came from the bathroom, so I missed the tail end. But Dylan Leclerc was able to Dylan Leclerc was able to plot specific bond prices on TradingView. I don't know which exchange they trade these things at, but we can at least have some visual insight into this.
You start seeing them hit Robinhood, buying convertible debt on Robin, just chasing the price, dude. That'd be crazy. Oh my God.
I'd buy them if they were there. It's a great product. Why wouldn't you?
Yeah, why not?
These, right? They were trading on some normal exchange where I'd get my hands on them. I'd be buying them if they were trading. Absolutely.
Why not?
Ben, as you were saying earlier, you bet his phone is ringing. The people want to buy these. Is it not likely at some stage he starts making the conditions a little bit more in MicroStrategy's favor? Because right now they're not only the best performing convertible bonds in the market, period, they're also even outperforming Bitcoin, which I would need to have explained to fully understand, right? It's not. It's not you get a little bit of the upside and then you're downside protected. Like, they're outperforming Bitcoin itself. What's going on?
Yeah, I mean, for that, you're really looking at the pricing of the call option embedded within them, right? Because MicroStrategy has been outperforming Bitcoin by such a big multiple, that call option that's embedded in the bonds holds so much intrinsic value as these things are running up that, yeah, the bonds themselves, holding the paper, outperforms Bitcoin. That's what he was showing in there. He's showing the pricing of the paper in that chart. So it's a very impressive thing. That's not normal for a bond market to have that type of performance. I mean, that is wild performance in there. So I think that eventually he'll start, particularly if no other people enter this space, right? If everyone does sit on the sidelines and not start issuing their own convertible debt and putting their own terms to it, I would bet you'll start seeing him look with, at what point can I stretch the strike price before people stop being as interested, right? Because I think the first zero coupon he did, and Jeff, you might remember, but wasn't it 50%?
Oh yeah,
A 50% premium?
I think it was. Yeah, I have it on my phone here. I think it was a 50%
So it was higher
premium.
than some of the most recent ones, which were
Yeah.
a little above 30. I think one of them was 40. And so he's getting these strikes that are way out of, but they keep going in the money so fast that maybe he can start pushing the strikes out a little bit further. He'll start playing with the rates, right? I think you start seeing what's the demand. If I keep a 30 to 40%, can I get it at a zero coupon where now I've got no cash flow impact from these bonds? I think that would be an important one because then he can just keep collecting these bonds. Everyone can yell about the software business all they want, but if he's getting 0% coupon bonds, it's not going to make any difference because he has no interest payments associated with those. So those are the terms I think he'll tweak. I'm excited to see what the next ones look like. I think if he rolls like the 2027s, and he'll probably upsize it given their current trajectory, but if he rolls it into 2029, which is what I think he would do, because 2027 would just be much too close to maturity, I would expect that he'll try to get a 0% then, because that's not a very long maturity still in the grand scheme of how they're laddering these out. But if he has to start filling the further out years, a 2033, a 2034, then I think you're going to still see a requirement to have some type of a coupon payment for an organization to lock their capital up for that long, right? But the shorter term ones, I think he could almost certainly probably get zero coupon at this point.
So those prior zero coupon bonds, $1.05 billion offering, 0% coupon, 50% conversion premium. And that was in February of 2021.
And that was before this was battle tested, right? They hadn't seen how these performed yet. So, I mean, what a gamble that was for those people, but it paid off big.
Would it be fair to ask the following question? Is he really just selling like industrial grade, like call options, and like we just call them bonds? Is that, what am I missing here? Because I'm no bond expert.
It's kind of like he's selling covered calls on MicroStrategy himself, right? I mean, that's kind of the mechanics behind this. So I think that's totally fair to kind of classify it in that
industrial
light.
grade.
People can make sense of that.
standard oil, grade. Industrial, institutional grade, industrial grade. Yeah.
Not the jet fuel, but still outperforming Bitcoin. Amazing. I really think he can sell a lot more of those than they're intending. What would be the downside of that? Can't they just? I mean, Ben, one of the things I saw you were commenting on was that they have cut costs by $30 million a year through staffing. I know they're changing their business, their actual product from to be more service minded, like subscription on their business intelligence from being selling licenses, as I understand. And I guess that has opened up the opportunity of saving $30 million a year, which is what they're currently servicing their debt with, right? So that's quite substantial and should allow for taking on more debt, I'm guessing. What you guys take?
Yeah, I don't know if it's 30 million. I don't know the number yet because I don't think we've seen the actual employee reduction come through. But Ryan and I talked about this a month or two ago where we were going through their financials and you got to a table that broke down their employee composition. And you were looking, and out of 2,000 employees, they had like 800 that were just focused on like R&D. And so you were looking at that, and you weren't seeing a lot of new products coming out. You weren't seeing massive overhauls to the BI platform. And so you're wondering, what the heck are they doing with this many people in that role? Now, I don't know what roles they're cutting, but regardless of which ones they're cutting, it's going to free up operating expenses, right? And right now, if they've had 65 million in cash flow, they're using 34 of it right now. That should boost that. And just having, if all they had left over was the remaining, 26 million in cash flow, if they get any zero coupon bonds, it probably covers and cash flows all the interest for the entire 5 billion next year, right? So I think it's going to have an impact. We won't know yet, probably until the end of the year. Maybe it was in this last 10Q, and I haven't looked at the employee makeup to see if there was a change there or not. Maybe Ryan did. He's raising his hand. But
Yeah,
it definitely frees up cash one way or another.
Before we go to Ryan, I just want to say Saki here has a message that's so there's hope for all of us there. Hodling MicroStrategy immediately makes you sexier. Ryan, you had your hand up. Go, sir.
Yeah, I wish I had the answer. I really just have a question. Ben, I of course remember that phone call. And here's the thing. We're not trying to be like Carl Icahn when he said I fired floors of people when he would do like hostile takeovers. We're not trying to do that. But is there whisperings about layoffs? This is the first I've heard.
I think they said it on the call.
They said it on the call.
They were looking.
I must have missed it.
They said it on the call.
Okay.
Yeah.
$14 million in severances saved, or like something like that. I heard 14 million, but I mean, there's so many other things that were said on that call. It's like it's going to take a month to unpack everything. I'm going to have to watch it a couple more times. It's like, holy shit.
Isn't it just feels so historic that the four of us just combined, four people were 1/1000th of the entire world, like of everyone watching. It's only 4,000 people watching that historic earnings that instantly took four people and everyone else that are bullish and made us more bullish. Just the whole mechanics and how clear they are in the strategy and the tools they have. Ryan, go ahead, sir.
Can I hop in real quick? Just to your point about the 4,000 and thinking that number is small. I saw a tweet from I think his name was Anil, like Twitter handle, like Anil said so, and I have no reason to think he got this wrong because he gets a lot of these things right. It was a short quote from Saylor talking about like earnings calls of old, and he said like way before the Bitcoin stuff. He was like, I would have 20 people on the earnings call. 19 of them worked for me. And the other person was like a guy in a different country who owned 20 shares of the stock. So I get what you're saying, that the 4,000 number seems small. It's already a lot big. And I think the 4,000 is going much higher, especially after that Super Bowl performance. So I think it's going higher, but the starting point is like 20.
And most of the world is still asleep, right? I mean, just because everybody was like, wow, that's a crazy good earnings call, that doesn't mean, the rest of the world knows about it, right? Like almost all of traditional finance is still asleep. They still don't know about Bitcoin. They still haven't started getting to understand Bitcoin. And I use this term, and I tweet about this a lot because I love when people share this with me, is bewilderment. And there's going to be this continued bewilderment over the next 24 months, and it will cause hysteria, right? People are not going to be able to comprehend what's going on, and it's going to be like chickens running around with their heads cut off, right? They're going to be like, how is this happening? What's going on? They're not going to understand Bitcoin to begin with, so they've got to start their Bitcoin journey, which takes hundreds of hours, right? Like at first you're going to start it, you start learning about it, then you short it, then you trade it, then you realize you're screwed. And then you're like, wow, this is actually some good technology. I'm going to trade it. And like the character arc for most of traditional finance hasn't even started yet, let alone you have to understand what Bitcoin is before you can even comprehend and quantify what MicroStrategy's even started doing. Right? This is going to take hundreds of hours per person to figure out. It's not just like 100 hours collectively. Like each individual person is going to have to spend hundreds of hours figuring this out. And you could see it like with the Yahoo Finance article that came out today. I mean, there's this narrative around net asset value is going to be around for a long time but it doesn't matter. It's some made up metric that, like just because some OG Bitcoiner doesn't think that, MicroStrategy should trade at premium to NAV doesn't mean they know what the fuck's going on with the equity market, right? Like they don't get it. They don't get it because they're like just OG Bitcoiners, and that's okay. But the equity market is structured differently than the Bitcoin market. It's just a different product with a different exposure, different buyer base. It's just completely different. So yeah, I mean, the next 12 months are going to be crazy, and everybody's going to run around with their heads cut off. That was the purpose for, having this call and having our True North call is, having some consistency of people that have been in this trade for a really long time, such that when there is mass hysteria, there's consistent, dialogue and communication.
Yeah. One thing I did check the employee headcounts. They cut by about 300, it seems, is what they've cut so far. And a lot of that was from R&D, and some of it was from general and administrative. It's from a bunch of different categories, but they cut 300 in this last quarter. So they are definitely trimming down the workforce, which is interesting. But let me pose a question to you guys, just because I know you guys are in this every bit as deep as I am, and you might have thought more about the volatility side of this. Do you think that there's a scenario here where Saylor actually has to increase the amount of leverage that he's applying to the business to keep the volatility up? Does this structural bid that he's putting underneath the Bitcoin market take some of the downside volatility out of Bitcoin, where he's going to have to go up to 30%, 35% of the fair market value of his Bitcoin in terms of leverage to keep his leverage or his volatility on the equity up? I haven't thought through it enough, so I'm just tossing it over the fence here.
Yeah, I've brainstormed a lot about this because I think this could happen really fast, and I personally think the concept of MicroStrategy and where it trades in the equity market, I think this is going to be like an S curve itself, where MicroStrategy kind of gets thrust up to the top of the equity market, to the like top 10 publicly traded companies, and then all of a sudden, like questions on valuation start to come. Like that's any question about valuation right now doesn't matter, in my opinion. Like once it starts to get up to the top 10, then I think, you could start to think about how to value these companies. Ryan wants me to talk about calculus. So yeah, it will be interesting to see, but I truly believe that, this is going to be the strongest financial company in all of history at some point, right? If unless Warren Buffett decides at some point to, spend his $326 billion of cash into Bitcoin, which he's not going to do, this is going to be the strongest financial company in all of history. And if Bitcoin continues to be their, the rock per se, and the price of Bitcoin is still volatile as we're transitioning from a fiat system into a Bitcoin system, I would still anticipate, even if they're the number one publicly traded equity at a $5 trillion market cap, it's still going to be volatile because of the underlying asset itself is Bitcoin, and it is volatile until we are more transitioned into a Bitcoin denominated system. I don't know. It's a good question. It's a really good question, and that is kind of where my mind is at quite a bit.
I mean, you could manufacture the volatility, I guess, right? I mean, pull the bid from the ATM for a couple of weeks, see if things pull way back down, turn the bid back on. You got to make up ground. It runs back the other way. I mean, you could technically engineer it, I guess, with that amount of capital that he's deploying, but it's just a thought exercise. I don't really know what the answer is yet. I haven't modeled any of that out.
And Ryan mentioned my calculus thought here. So I've brought up this concept of the growth rate of trees, right? So the growth rate of trees is an S curve. So if you plant a tree, if you want to harvest the tree to get the maximum yield, you pull the second derivative of the growth rate of the tree, which tells you where the rate of change goes from positive to negative. It's the rate of change of the rate of change. So in order to maximize yield, you identify where the rate of change of the rate of change flips from positive to negative, and that's where you can maximize your yield. So I could see a scenario where, well, in thinking about that concept, if you harvest your tree too early, it's inefficient. If you harvest your tree too late, you waited too long. But there's a benefit of like hitting this sweet spot of where like the rate of change moves really fast, where you can maximize your yield by taking calculus into consideration. So I think that it is a concept when thinking about like this net asset value, where if you anticipate there's going to be a significant flow of buyers in the future, for example, rebalancing of ETFs, QQQ inclusion, S&P 500 inclusion, you may want to consider those periods of time where you're going to have significant run up on the price of the stock that may be challenging to rationalize. And that would be a point in time where you would, think about the calculus or the growth rate of net asset value and harvesting the yield, tapping the ATM at the right moment. It's an interesting concept.
Yeah, I've been trying to hear more about that concept ever since me and Jeff texted about it, like when we were going to Bitcoin first. But I mean, that is like really profound stuff. If you think of that S curve on like a calculus type chart, rate of change, I love that. I'm like so compelled by that stuff.
It's good math. It's good math.
It's about the thought exercise of like the wildfire like catalyst, and then like how quickly things can like start burning, and like the rate of change of the rate of change. You could add a third change derivative and do that one as well. You know what I mean? Which is like what I was doing with modeling the rate of decay of the turns of like the past 3 Bitcoin cycles, and trying to like give us a ballpark of where we're going to be this cycle. And I think if just Bitcoin cycle alone plays out, that puts us in like the 200K high point, which also lines up with like a lot of what the Bitcoin power law crew is coming to. But there's 2 quick things I want to get out. I want to touch on the software business in the bear case. When I was shaking my head no at Ben's question and Jeff was like, yes, I just love the software business. I think it's a complete treasure, and like nobody understands it. And I talked about this with Tim Kotzman today on his podcast, so I won't unpack that whole thing. I'll talk about it later on a space or something, but I want to be cognizant of these guys' time. So the bear case, here's what I would like to start by saying about the bear case is that the burden of proof of the bear case is on the bears. That's point number 1. I haven't thought about anything other than MicroStrategy for 12, 15, 16, 18 months now. I don't have another job. I do this, meaning I read everything. All the bulls, the bears. That's how I became, good friends with these guys. That's how I met Anders. I read everything. I have not seen a singular meaningful bear case for this stock over a sustained period of time. What's it going to do tomorrow? I don't know. And I would have said that even if the election wasn't tomorrow. But it's like, what's going to happen next week, the week after? I have no idea. We do have that like very near and present catalyst tomorrow, which could be peak uncertainty again, regardless of your political views. It could just be an uncertain moment in markets. I think both sides are going to be lawyered up to the gills. I think they're both going to challenge the outcome, and it's just a question of how long is it going to take to revitalize like clarity into markets. Quick example there, when 2020 election, when it was believed that Joe Biden had won the election, the S&P 500 futures up 5% just on that piece of news. Now they could say, well, in 2016, when Trump won, the futures were getting wrecked. You can see the clips on all the news stations because that was the main thing they were talking about. Like, Trump's the president, the Dow is selling off in the futures market. And that was because that was like an unexpected event. Everyone, including Trump, thought Hillary Clinton was going to win the election because he rented out this real small room for the victory speech. Hillary Clinton had this glass building, like the nicest place in all of New York City. Trump, who's a big like image and like big size, more people, bigger ballroom, picked a small one. He thought himself he was going to lose. So everyone thought that Trump was going to lose, hence why there was like the initial like shakeout and sell-off. But then in 2017, we had the lowest realized VIX volatility of the entire time that the VIX has existed. Let me say that again. We had the highest number we had the highest number of closes below a 10. I forget the number. It's like 20 or 30 or something like that. And the lowest average like realized VIX volatility 2017, more so than any other year going back to 1990, around the time me and Jeff were born. So I just want to be so like sharp on that point, because people make the biggest deals out of like short-term price action. And if you would have tried to trade that stuff without actually knowing what's going to happen, and not only that, but what the market impact is going to be, you're going to be lost. This is why like high conviction bets, regardless of the macro backdrop and stuff, is just so key. You never know. Here's how I'll wrap this. We don't know what's going to happen tomorrow. And then like in the weeks to come, it is probably going to be a volatile, like choppy scenario, especially if it drags out for weeks or months. But I know I got so derailed there, so let me just pause.
No, that's really, really good. And I think Cosmic Contrarian is picking up something I think we've all been saying since the first episode of MicroStrategy Mondays, and even before that. I think all of us agree that MicroStrategy is going to be the most valuable company in history. There's no doubt about that. I think because if you're convinced of Bitcoin going to take over, it's going to be so valuable that having as much Bitcoin as they have and no one else can catch them, that's just the way it's going. It seems that the price of Bitcoin and also MicroStrategy the last couple of days have been holding back, probably because of we're having the election tomorrow. I guess what we'll see is, because markets don't like uncertainty, even though there's chance to the upside, but once we have certainty tomorrow night or Wednesday morning, I personally expect that we see both of those run, even if it's not in favor, but just having certainty, which is irrational. But and then we have a couple of weeks, and by the end of this month, I think the odds of MicroStrategy, even at the current price entering QQQ, are looking quite good. And I think that's what is that, $500 million of passive buying? I mean, it's hard not to be bullish, right?
Right. And also, like, nobody's selling their Bitcoin. Like, are you serious? Like, it doesn't matter. It doesn't matter what the outcome of the election is. Like, you can't stop this train, right? I mean, nobody's selling their Bitcoin. I haven't met a single person that's like, oh man, if Kamala wins, I'm going to sell my Bitcoin. Right? It's like, no, nobody's doing that. So it is an interesting couple of weeks. I think everybody's just kind of like holding their breath, frozen, and trying to out game theory everybody. Right? Everybody's trying to like get 2 steps ahead. It's an interesting time.
Can I hop in there real quick? Because what Jeff talked about, I also talked about with Tim earlier, in that it's like nobody's selling their Bitcoin. Let's think of the people who are for a second. But more importantly, let's think about the other side of the trade. Who's the buyer? It's IBIT. It's President Nayib Bukele in El Salvador. It's perhaps future President Maya Prabhu in Suriname. It's Semler. It's Metaplanet. And it's another small company. Maybe you guys have heard of them, MicroStrategy. They just put out a plan to buy $42 billion worth it over the next 36 months. So that concept of like what Saylor would talk about, like an investor wants to own things that in the decades to come future, someone who's way richer and way smarter than you is going to want to buy from you. You know what I mean? And I can easily get side rambled, so I'll just pause there.
Yeah, and it's a global asset. It's a globally liquid market, and there are markets across the entire world that are buying Bitcoin, no matter what the price is. So, I mean, there's no incentive to, I think, be worried about government interaction or government trying to stop it, because the game theory points the other direction. Like every party has incentive to lean into this thing, because if you don't, another country is, and nobody wants to lose that race. That's it. It's the most fun game theory concept of the entire world, and we're going to be dealing with it for the next 30, 40 years. It's crazy.
Well, look at BRICS, right? I mean, however you feel about BRICS, they're mining Bitcoin, right? You don't
Yeah.
put up that infrastructure if you don't intend to use it here at some point. And so it would seem to indicate that they're going to eventually be open to settling international trade in Bitcoin, which would make total sense, right? I mean, after Russia got cut off from SWIFT and all of that happened, if you're not putting contingency plans in, no matter what country you are, right? If you're a country that's not on great terms with the US and you think there's a potential that you could get cut off from something like SWIFT, you've got to have an asset to trade with still. You can't just gridlock your entire economy because the US got mad at you, right? So I think that that game theory really does start to kick up here pretty quickly because some of these big, powerful countries are starting to go, yeah, we're mining it, right? Which means we're holding on to it. So, and why? Why would they be doing that if they weren't intending on using it? So I think when you look at those developments, it does reach escape velocity from like single governments crushing it, right? So, okay, could the US come and say, yeah, you got all these 6102 or 5102, whatever it is. I don't pay any attention to it, so I don't even remember the number, but whatever it is, they're going to come and steal all your Bitcoin from you. Well, okay. But if the rest of the world decides it's still valuable and they're going to trade in it, all you did was damage your own country.
Right.
Right. So,
Right.
But the bear case to all this stuff that happens is one, if you're not a believer in Bitcoin, you'll never see a bull case in this. Right. We can just acknowledge that. Everyone who thinks Bitcoin's going to fail, if that's your stance, I'm not going to try to convince you of a bull case. If you don't believe in the core asset, that why bother trying to make sense of it, right?
That's
if you
Peter
think
Schiff.
Bitcoin's going to fail, sure. Well,
Right.
Peter Schiff, he said that everyone else in his family owns Bitcoin. I bet he has 1,000 of them, right?
Yeah.
But this is his character. This is what gets him on TV constantly. He's marketing products. Like, come on. I mean, there's incentive there for him to play this character until it's 5 million a coin, and he's going to say it's going to $5 next week, right? It's over. It's going to like that's his shtick now. So you just got to look at his incentives and how that aligns. Well, he's got business interests, and the way he sells things is by getting all the attention on him. And how does he do that? By being the worst troll the world's ever seen, right? Here's a guy that's got a bank that collapsed. He's got these funds that have returned $0 to investors. And then he's out here telling the world that this asset's going to fail. Like, all right, spare me, right? But I don't think he actually believes it personally. I think it's a show.
So somebody's got to play that role, and he's making money on social media by being contrarian. Right?
Exactly.
I don't believe it. I don't believe it 1 minute that he doesn't own Bitcoin.
No, not at all. His son owns it. He said his wife owns it. Like, so he owns it, right? Let's not kid ourselves. But then the other bull or bear case to this is you've got point in time bear cases, right? People have to look at black swan events at a single maturity date. I mean, the reason they ladder out all the maturity dates on these convertible debts is so that no one huge amount of these is going to come due in any single year. And so when you look at the risk associated with that, I mean, they're not leveraged to the ears like people think they are. I made the analogy the other day of saying that the amount of Bitcoin that they own, it's kind of the equivalent of you having a friend that went and got a house and they said, yeah, I took out a 25% mortgage. And you go, whoa, are you sure? That's pretty risky. Like, no, you don't ever hear that. People take 80, 90, and 100% mortgages out these days, and no one bats an eye, right? But here, he's got a lot of flexibility. And if you're looking at the floor, one, let's be clear, there is no margin call price here. I don't care how many people say it. These are unsecured bonds. There's no margin call, right? There's no point that it hits where things get liquidated. So take that off the table. It's not a secured loan from a bank with covenants and all that stuff. It's not what these are. But you can look at what's even their break even, right? If you just take the amount of convertible debt divided by the Bitcoin that they hold, it'll give you like, what, 16,500 something in that ballpark, which would be their break even where they could cover all the debt with the Bitcoin they hold if, right? And this is the financial engineering part people need to understand. If they didn't just go use the ATM to get more Bitcoin to put to the balance sheet, so that they've got more value on the balance sheet proportionate to the debt, right? And even then, that's to cover all the convertible debt, not the one note that's maturing in 1 year. So, there's a lot of flexibility here. I won't pretend that black swans aren't possibilities at the exact date these things are coming due. Of course, maybe, right? I don't know. But if you have any belief in the trajectory and the game theory behind Bitcoin, right, you're not looking at 2030 and going, oh, I hope Bitcoin isn't 3,000 a coin, right? Like that's not your view. So we're not that group. That's why we don't spend all our time on the fringe what if cases for the bear. I think about them because I want to make sure that I'm not going crazy and doing something ridiculous here. But I've not been able to find any where I look at their financial strength and go, this one's touchy right now, right? A lot of margin at this point.
So on that point, and I want to make a clear distinction because everybody's, thinks there's a lot of people that think MicroStrategy is going to be the next FTX, right? So FTX, so just look this up. FTX had $9.3 billion in debts and $8.7 billion in assets. Okay. So they were 106% leveraged. They had more debt than they did assets. So the problem with FTX was they were a dodgy bank, right? They were running bank operations and lending out products that they didn't have. And they had more debt obligations than they did asset obligations, which is why we focus on this financial leverage component a lot, right? Because they are significantly under leveraged relative to something like FTX or a bank that was very over leveraged.
I want to jump in real quick. First of all, from what you said, Ben, you reminded me that we learned on the earnings call that now none of MicroStrategy's Bitcoins are encumbered, which means none of them are put up as collateral anywhere. It's completely 100% in their sole custody. They're not lien against anything. And also, Jeff, if people don't already know it, I think a lot of people do. You call Punter, Jeff, for a reason. That 74-yacht punt that turned around a game from a losing game to a winning game in your college days, I believe.
Yeah.
College there. And I think Clint just adopted something, gave you a new name, which I think is awesome. You're the quarterback. I think that's for you. That's for you, Jeff.
Perfect. I love it.
Yeah. Thank you. Thanks for that, Clint.
Cool. Well,
go ahead. You had a comment. Go ahead.
Well, no, I just got to jump. I just wanted to say thanks for hosting us. I appreciate the time. I got to jump. We've got some more obligations. We've got prep for MSTR True North and a bunch of work on the horizon. So hopefully I'll be back next week. And yeah, we'll chat soon.
Thank you very much for jumping on, Jeff. And also, yes, while you're still here, a quick shout out. You'll find these three financial masterminds on MicroStrategy and a bunch of others of their friends investing in MicroStrategy on MicroStrategy True North, which is live 7 p.m. PST on Wednesdays. Is that correct?
That's correct. 7 p.m. PST on Wednesdays. Yep, absolutely. And it's restreamed. We share it on YouTube afterwards. So if that doesn't work for your time zone, it's okay.
There you go. Thank you, Jeff. Thanks for being here.
Yeah. Thanks, everyone. We'll see you.
Yep.
Go sell some bonds to the.
I want to go sell some bonds. Yeah, I gotta go convince people that I gotta sell some bonds. All right. See you guys.
There we go. Yeah, Ben, you have a little bit more. Whenever you guys gotta go, you gotta go. Thank you for to all the chat that is cracking us up and bringing great and funny comments. Ryan, we can always continue a little bit afterwards. All right, you got it. Just read your comment on that.
We've got the internal group call at 7 our time. So eat food or might work out or something.
That's a good idea. Food and workout, get some protein and lift. That builds testosterone. It makes you a man, right? That's what we all need to do. Eat some red meat, lift, and otherwise you just become another. Okay, I don't want to say it. Keeping it. Ben, you had some. Did you want to grab the mic there, or have some comment on what Jeff said, or?
Yeah, I was just going down the thread. Since we've been game theorying out the bear case here even a little bit more, the other thing that mitigates a single black swan event in any given year is that with the cash flow, so say they're not tying up 100% of their cash flow, that does keep them available to roll that debt forward, right? They could go get traditional debt using the cash flow of the business and roll that one that they would have had to redeem for to buy themselves additional time here. So people throwing the bear cases out, they put the burden of truth, like Ryan said, they try to put the burden of truth on the bulls here to think through that case. But you do have to go through. It's a worthwhile exercise to understand the mechanics of the strategy, because when you look at other companies that enter the space, some of them might not get this cushion that MicroStrategy's had. So you might see some companies that try to lever up really high, and they might have some of those triggers within their business where they could get liquidated. So it's worthwhile to explore these activities, but if we're all honest, it's way more fun to be a bull, right? What a boring thing to be if you're just going to sit there and be bearish about the world all the time, particularly Bitcoin. We're not in Bitcoin to be bored and to be bearish. So, you'll see more bull case from me than bear case, but I've thought about it. I'm just not spending all day thinking about it. I like a brighter future where this works out spectacularly.
We are in Bitcoin for the freedom from the tyranny of
Yeah.
state overreach, theft, taxation, inflation. Those last three are, by the way, all the same, just in case you didn't know. We're here for freedom. Ryan, did you want to add on that?
Yeah, I wanted to add on that point specifically, and I love the freedom and all that stuff. That's why I'm a Bitcoin maximalist. You know what I mean? But yeah, so like I also do subscribe to the thought. I think this might have started with Charlie Munger. I don't know. I've heard it like several times. If you can't understand and argue both sides, then you have no business taking a position on either side. So like to Ben's point, yeah, I've thought about the bear case a ton. You know what I mean? I'm not going to package that up and put it out into the world because it's just me speculating on like open-ended ideas. Like a couple of the ones that always come up every time I run a space, someone like rushes to the speaker panel to be like, what about a 6102? I mean, every single space. And if that's the biggest like thing that people are afraid of, that's a good situation as far as I'm concerned. And then they'll also speculate, well, what if we go into a bear market? Then MicroStrategy might go down more than Bitcoin. It's like, guys, come on. I'm here to play. I want big boy volatility. Like, you got to give me something better than what we're working with here,
I think the better ones that come out are, what about a nuclear war or an asteroid hits and the electrical grid goes down? It's like, well, then we got bigger problems than figuring out what the vol is on MicroStrategy. I don't think any of your currencies are going to matter if those things happen. So you could spare me those scenarios.
It's that, and it's like, well, what if another operating company just spawns out of nowhere and buys more Bitcoin than MicroStrategy? I'm like, I welcome that, because here's the thing. No one's going to be able to emulate the trading vehicle that is MicroStrategy. And it's so well entrenched in the equity market, the bond market, the options market. And it's so like, it's almost all Bitcoin, right? Like Dell Computer, I've run the numbers. Dell Computer in a very short order with free cash flow and like a convertible bond MSTR type situation, they could get more Bitcoin than MicroStrategy. It's very possible. However, the majority of their business will still be derived from the earnings on the hardware business, even if they have more. Like, even if they have more, it's still not going to trade and operate the way that all of the financial market participants are expecting, like a levered long Bitcoin equity to operate,
Sounds good to me. So we're nearing now. It's 5:45. If you guys want to have a closing comment, and you can find these gentlemen on X, both of them. There's N at Ben Werkman and at Raekwon, and Jeff is at Punter Jeff. Ben, you want to have some final comments? And also just want to say, to if anyone's new here, I have this MicroStrategy Mondays every Monday, 4:30 p.m. With these brilliant financial microstrategy analysts. There's a kid analyst. Importantly, that's the best type you could get. That's the highest level you can achieve is kid analyst. Someone who's here because they taught themselves and they cared and they looked into it and they read everything like you two, and not someone who's just doing what he said and wearing a suit on Wall Street. The guys in suit wear, they work for guys like Ryan there with a cap back and a Giants jersey. Ben, final words from you, please.
Yeah, I think with the kid analyst thing, I think it kind of turns into independent analyst, right? Like I actually go out of my way not to watch a lot of the professional analysis on these types of companies, because if you see someone else's analysis first, you get stuck in their method of thinking, right? You'll take little clips from what they say this means, and you won't keep thinking for yourself on it. And so I try to actually avoid it. And you step into some traps when you do that because people will correct you. And I've been corrected a lot, which is great because the best way to dig in and really learn what's happening is to make the mistake yourself. And so I try to do that as independent and as thoughtfully as I can do. But I want to explore these types of evolutions. There's a reason I don't cover traditional companies, right? I think those get analyzed to death. And I'm not interested in those models because they're not different. But this one, MicroStrategy, pulls you out of that comfort zone of financial analysis and forces you to put different values on things than you otherwise would. You never heard anyone talking about engineering products to sell volatility to hedge funds before, right? That wasn't a business for a public company. So this is a totally different company to try to value. And you've got to come to that with clear thinking, with a fresh approach. You got to throw away everything you've heard about earnings per share, right? Yes, you need the foundational component of understanding cash flows and understanding the financial markets. But when you start from zero on something like this, that's when you can really get the conviction that you want in this type of a trade, because you start building from the ground up and start understanding every lever they have to offer. So I'd encourage everyone to keep digging on this one. It's going to keep evolving. Saylor's presentation was so bullish that I could hardly deal with it. And he's throwing out all these products they haven't even offered yet that are all just conceptual for whenever the market conditions are right for those products, they'll start offering them. So I don't know what the final form is. So we've still got a lot of time to speculate, a lot of time to dig. And I think it's just going to be an absolute blast in the next 12, 18 months.
Yeah, it's going to be the next 12 months, 11, 12 months, and potentially even more, the most exciting. I think I have been watching Bitcoin and MicroStrategy, also get to watch both now. And next time, maybe we can talk about how we see MicroStrategy go through the bear market. I think that will be an interesting thing. Ryan, also final words from you. And thank you very much, Ben. And thanks for being here, Ryan.
Yeah, I loved what Ben said, and Anders. I mean, that was so heartfelt what you said there about the kid analyst stuff. It's like, and then Ben tied it in so well. It's like, no, they're just independent kids who just like did the work. You know what I mean? So that was extremely heartfelt. Thank you for that. My closing thoughts here are just going to be me dunking on traditional finance media for like 30 seconds. And today, this is an example from today. This is how crazy things are. Today, I missed Semler's earnings call. Just totally didn't even know. People were posting about like, oh, we bought like, or Semler bought like 40 more Bitcoin. And I'm like, that was today? Look, I do this stuff. I do this stuff full time, and I'm mostly just focusing on research on MicroStrategy, but I have like 2 operating companies in my growth account. I'm a 2-company guy. That's it. These people on CNBC who own equally weighted 40 or 50 names have no idea about any of them. And I know they have teams of people, blah, 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 but like them as like individual operating people, they know nothing. To reference the old Jim Cramer quote during 2008, like they know nothing because it's such a full, all-encompassing, just to do 1 or 2 companies. And it's like 90-10, let's say. I'm more focused on MSDR. So it's like 1.3 companies. these people have 40, 50 names all equally weighted. They just know one or two, like, oh, free cash flow yield went up 10%. And then they talk about another stock, and then they talk about another stock, and they talk about another stock. They know nothing about any of them. Those are my closing thoughts.
Absolutely. It's like when you go to a bigger social event, all your conversations are sort of like higher level, but once you're with one or two friends alone, you get more depth. And it's the same thing if you're just looking into two stocks, and I think all of us just like looking at Bitcoin and MicroStrategy and you're looking at similar as well, you just get another depth that you can't get anywhere else. Thank you everyone for watching. On Sundays on this channel, I do Bitcoin content for Christians. Mondays, MicroStrategy Mondays. Thank you so much, guys. Great comments today. As always, very educational.